Good morning, this is Mike Vacchi, Princeton Trader from the top step I am for nakedtrader.com, here with today's pre-market webcast for Tuesday morning. So yesterday, a lot of sell the news yesterday. We talked about it in yesterday's morning webcast. We got 20 handles Sunday night after the rumor of the vote came out that it was going to happen. The president gives his press conference, we go up 20 handles immediately. And that, at least in the short term, has proved to be the top. We have sold down below the 200-day moving average, which on my chart is 1274.67 on the ES, on the E-mini. On cash, it's 1276 and change. Cash, so we moved down below the 200-day moving average on both and bounced to close above last night. The futures this morning, however, are below the 200-day moving average. We're currently trading 1272.50. We just made an attempt to get back over the 200-day moving average, which was unsuccessful, but I don't read a lot into that at this point. The number one question that we have to answer this week is, can we get back above the 200-day moving average on the cash and on the futures and stay there? If we can, then what we have here is another sell-off down to the 200 and a bounce, which is fine. Uptrend intact. If you're a bull, then you're happy. We're headed back over 1300 and everything's going to be fine. Now, the converse of that is if we begin to bump up on the 200-day moving average as resistance. If the 200-day moving average decides it wants to be the ceiling of this market, it's going to be a long rest of the summer and a long fall. But let's not assume anything. Let's trade what we see and go from there. Now, with the vote yesterday, there's some uncertainty that's been taken out of the market. But the downgrade from S&P is still on the table, although I think that's a lot less likely. Italy is a problem. The Europe debt crisis continues on, and we have jobs on Friday. ISM was not a good number yesterday. Personal income and spending was not a good number this morning. So there's a lot of economic data out there that we need to be concerned with. All that said, all that negativity aside, we are basically 44 handles straight down from 1310 down to 1266, and we're 74 handles straight down during the 7-day sell-off. It is time for a meaningful relief rally in this market. Some kind of a reversion to the mean, something along the lines of getting us back towards 1300. But issue one is getting back over that 200-day moving average. Then we can start talking about relief rallies. But if you're licking your chops to short here, down 74 handles in 7 days, I would recommend against that. So let me give you some levels. Support, this morning's low 66, followed by 1261, and then the big number 1252.25, which is just hanging around out there, begging for a retest. I don't know if we're going to head down that far, but if we do break 66, there's not a lot of support between 66 and 52. On the upside, we have to deal with the 200-day moving average, 1274.67 today, followed by 81, 85, and then 1291.25. Keep it small. Still a lot of uncertainty. Seasonally, not a good time to put on big trades, and just generally be careful. I'll be back tomorrow morning with another webcast. This is Mike Vacchi, Princeton Trader for nakedtrader.com. Have a great day, and I will see you tomorrow.